Warren Buffett, you know the name, right? The legendary track record. But how did he actually become the Oracle of Omaha? Well, it wasn't just one big idea. It was an evolution, a lifelong journey of learning. And today, we're going to deconstruct that journey, tracing the intellectual steps that created the world's most famous investor. And believe it or not, it all kind of boils down to this one really powerful metaphor: a castle, a moat, and yeah, even piranhas. So what on earth does medieval warfare have to do with modern investing? As we're about to see, this single idea is the key to pretty much everything Buffett has ever built. Okay, so where does a story like Buffett's even begin? For him, it all starts with his teacher and mentor at Columbia University, a guy named Benjamin Graham. Now, Graham is known as the father of value investing, and he didn't just give Buffett a strategy. He gave him a complete intellectual framework for looking at the market, the absolute bedrock. For Graham, it was all about one thing: defense. And his core idea was something he called the margin of safety. Put simply, it just means you only buy something when it's selling for way less than you think it's actually worth. This creates a cushion, a buffer, that protects you not just from a bad market, but from your own inevitable mistakes. This quote just perfectly captures his whole mindset. It wasn't about hitting grand slams. It was about just not striking out, ever. He taught Buffett to hunt for what he called cigar butts, these unloved, discarded companies that were trading for less than their assets. They were ugly, for sure, but they had one last free puff of profit left in them. It was quantitative, it was disciplined, and above all, it was safe. But there was a problem with the cigar butt strategy. See, while it was great at not losing money, it wasn't exactly the best way to make a lot of money, especially when you start dealing with huge sums. Buffett realized he needed to evolve, and that evolution was kicked off by two other intellectual giants: the investor Philip Fisher and, of course, Buffett's longtime partner, Charlie Munger. And right here, you can see the massive philosophical leap Buffett made. He moved from Graham's world, which was all about finding a mediocre business at a bargain basement price, to Fisher and Munger's world, which was about finding a wonderful business at a fair price. The whole focus shifted from how cheap is it to how good is it. And in Buffett's own words, you can see the new idea taking shape. He didn't just throw away what Graham taught him, not at all. He merged it with Fisher and Munger's focus on quality. He wasn't just a cigar butt hunter anymore. He was now on the hunt for great companies. Honestly, this was the single biggest change in his entire career. So this brings us right back to the castle. Buffett's new, combined philosophy needed a name, a metaphor to help people get it. And he came up with one of the most famous in all of finance: the economic moat. This is the protective barrier that keeps a great company, the economic castle, safe from all its competitors. So what is a moat in the real world? Well, it's just a durable competitive advantage. It could be a brand that's basically untouchable. Think Coca-Cola. Or it could be that you're the absolute low-cost producer, like Walmart. Or maybe it's high switching costs, where it's just a huge pain for your customers to leave. And then there are network effects, where a service gets better the more people use it, making it almost impossible for anyone else to catch up. These are the moats that protect a company's profits year after year after year. Okay, so you find a great business with a wide moat. You're all set, right? Well, not quite. Buffett and Munger realized that even the best strategy in the world is totally useless without the right mindset. The real key to long-term success isn't buried in some spreadsheet. It's right inside your own head. So I'll ask you, what do you think it is? A massive IQ? A PhD in finance? Some crazy ability to predict the future? The real answer, it turns out, is a lot simpler and way more profound. That's it. In 3 simple words, that's Charlie Munger's secret. The most important quality for an investor isn't intellect, it's temperament. It's the ability to stay rational when everybody else is freaking out. It's mastering your own emotions. That is the real superpower. Financial journalist Jason Swag really puts a fine point on this. He says risk isn't just the market going down. The biggest risk is the gap between your confidence and your actual knowledge. It's not knowing what you're doing when you think you do. True risk management, it starts with a little bit of humility. So what does this incredible intellectual journey mean for the rest of us? I mean, for you and me. The goal here isn't to go out and perfectly replicate Buffett's portfolio. The real goal is to apply these timeless principles to build our own financial fortress. A stable, secure future that's built on a really solid foundation. So here they are, the building blocks for your own fortress. They're the simple, powerful rules that Buffett and Munger live by.
They're all about avoiding the big mistakes, like high-interest debt, and just sticking to what you actually know. The real engine of their wealth has always been patience, just letting time and compounding do all the heavy lifting, all while they commit to a lifetime of learning.
At the end of the day, Buffett's entire evolution, from Graham's cigar butts to Munger's economic moats, was really a story about continuous learning. He read constantly, he adapted his thinking, and he was never, ever afraid to admit what he didn't know. The real takeaway from his life isn't a stock tip. It's understanding that the single best investment you will ever make is in your own knowledge. So what are you going to learn next?